Unity Software is slated to go public this week. Today we'll take a look into the company and its financials to help you decide if buying the company's stock makes sense. And also, we'll take a look back at how Snowflake performed on its first day of public trading and what that could mean going forward. If you like investing in hot new IPOs, this video is for you. Welcome to Healthy, Wealthy, and Wise, the channel that has evolved to talk about all the big and not so big companies going public, whether it's by traditional IPO, a SPAC, or direct listing. As always, I want to thank everyone in the community for your fantastic support, and I'm really enjoying the discussions we're having in the comments. And for those of you new here, my name is Kevin, and I want to welcome you to the channel for the first time. And if you end up enjoying this video, we'd love to have you join our community. It's totally free. No need to sign your life away or give up your firstborn. You just got to press that little red subscribe button. And before we get into it, please know up front, I'm not a financial advisor, and while my videos are meant to be informative, they should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decisions. So let's talk Unity Software. The California-based company was actually founded in Denmark as Over the Edge Entertainment in 2004. In May of 2009, the company reorganized as a Delaware corporation as Unity Software Inc. The company itself is a leading software platform for creating and monetizing video games. Their platform provides a comprehensive set of software solutions to create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. According to their prospectus, content built on the Unity platform offers end users a fundamentally more engaging and immersive experience than traditional static content. Content made with Unity is interactive, allowing end users to connect with the content and with other users. It is also real-time, allowing it to instantly adapt to end user behavior and feedback. Its content allows graphics to be expressed with three-dimensional shape and depth, permitting multiple viewing angles and enabling augmented and virtual reality. Their platform consists of two distinct but connected sets of solutions. The first one is a suite named Create Solutions, which is offered by monthly subscriptions and is used by content creators such as developers, artists, designers, engineers, and architects to create interactive, real-time 2D and 3D content. The second solution set is named Operate Solutions, and it offers customers the ability to grow and engage their end user base, as well as run and monetize their content with the goal of optimizing end user acquisition and operational costs while increasing the lifetime value of their end users. Operate Solutions is offered primarily through revenue share and usage-based models. Unity believes these two solution sets allows them to generate revenue from their customers as the customers using Create Solutions then drive adoption to Operate Solutions. Which makes sense because growing their user base and monetizing their content is the next step from creating the content, and Unity wants to make that as easy as possible for the customer so that they stay with the company as a one-stop solution. For the year ended December 31st, 2019, 63% of their Operate Solutions revenue that came from customers with over $100,000 in annual revenue was from customers that also used their Create Solutions. As of June 30th, 2020, Unity had approximately 1.5 million active creators in over 190 countries and territories worldwide. The applications developed by these creators were downloaded over 3 billion times per month in 2019 on over 1.5 billion unique devices. Unity is responsible for about 53% of the top 1,000 games in Apple's App Store and Google Play. As stated in their filing, the dramatic growth of end-user demand for interactive content is driving industries beyond gaming to embrace the advantages of real-time 3D content. Today, major companies in industries such as architecture, engineering, construction, automotive, transportation, manufacturing, film, television, and retail are using Unity across many new use cases, including automobile and building design, online and augmented reality product configurators, autonomous driving simulation, and augmented reality workplace safety training. These new forms of content are emerging parts of the company's business and represent a significant opportunity for growth. So that's a little background of the company. Now we're going to take a look at their financials, starting with revenue. For the years ended December 31st, 2018 and 2019, revenue grew from $380.8 million to $541.8 million, representing year-over-year growth of 42%. Along with that growth, the company is also reporting strong gross margins of over 70% over the past 2 years. Now on the flip side, the company has not been able to show a profit since its inception, and over the past 2 years have reported net losses of $131.6 million in 2018, and then up to $163.2 million in 2019. Much of the losses are due to high research and development costs, including those costs being up 40% from the previous year. Now recently, they have shown a reduction in the amount of cash used in operations, although in their filing, Unity does state that can fluctuate. So while the growth looks strong, it is important to consider that they have yet to make a profit in effectively 16 years of existence. So looking ahead, let's try to see how much more we think the company can grow. From the company's prospectus, they believe that there's a total market opportunity of approximately $29 billion across both gaming and other industries. And then according to a 2020 market research report by Research and Markets, the global gaming industry is expected to grow at a compound annual growth rate of 12% from 2020 to 2025. And by the end of 2020, the immersive gaming segment is expected to generate $4.5 billion. So that's what's in front of Unity. Now, who is in their way? Well, there are two sets of competitors, one for their Create Solutions product and another for the Operate Solutions. On the Create Solutions side, their primary competitors are considered to be Epic Games and Check-On Technologies. You might be most familiar with Epic for two reasons. One is for the very popular Fortnite game, but also for the company's battle with Apple and Google about pricing on their app stores. On the Operate Solutions side, they have some big names that are considered their competition, including Amazon, Facebook, Google, Microsoft, and Tencent. However, the competition on this side of the business isn't as clear-cut or as direct, as many of these competitors are also customers and partners. So that's some information on the company that might help you in getting a better idea of what the company is about, what kind of numbers they're producing, and what the market and competition looks like in the near future. The IPO is expected for Thursday, September 17th, with trading then beginning on Friday under the ticker U. The initial pricing was expected to come within a proposed pricing range of $34 to $42. However, that has since been revised upwards as the company now looks to price between a range of $44 to $48. At the midpoint of the proposed range, Unity would raise $1.2 billion. From the money raised, the company intends to use the net proceeds for general corporate purposes, including working capital, operating expenses, and capital expenditures. And they also plan to repay the outstanding $125 million of debt that was borrowed in order to provide liquidity in case of any impact on the financial markets related to the pandemic, but which they have not yet used to date. If pricing holds, Unity would be valued in the $12 billion range. The company was last valued at around $6 billion in the middle of last year. So now that it's going public, which will automatically bump up its valuation some, and then reporting a strong year of growth since that last valuation, at the IPO price, I think that it's a reasonable growth of valuation, at least as compared to some of the other high-flying tech companies we've seen IPO recently. At the valuation, when I look at the growth performance of the company, a big market to work in, one of its main competitors potentially hurting themselves in a legal fight with Apple, and even when considering it hasn't posted a profit yet in 16 years, I definitely think it's a company to consider. But again, it all comes to the price we could end up getting it for. And after watching some other IPOs, I don't know if it'll trade in a range I'm comfortable with. We'll have to see what happens. I'm sure that Unity is hoping its IPO performs as well as Snowflake's, or even half as well. Wow is the only word I can use to describe that IPO. I expected Snowflake to trade higher than its IPO price, but not at the levels it did. It opened out of the gate at $245, more than double its IPO pricing of the night before of $120. It then surged upwards immediately to the $300 range before settling back and closing at just under $254. If you watched my previous videos on Snowflake, you know I like the rate of growth and the potential of high future growth of the company. And when considering that, along with the hype, the pricing of the offering, and the stamp of approval from Warren Buffett, there was no question that buying the stock was going to come at a premium. But I have to admit that while I really didn't know what to expect considering the Super Bowl levels of hype the company had, it still came out hotter than I thought it would. Again, wow is the only word that describes it. Did any of you end up buying some shares, or did you end up passing for now? Please let me know in the comments, I'm curious to know. I always say that what people within the market are willing to pay determines what the stock is worth. So I'm not going to say that the stock is overpriced. But for me, even considering the red-hot growth potential and future earnings, the company seems valued too high, too fast for me. So I did not buy in at this time. That's not to say I won't eventually. I'll just look for an opportunity down the road. Some of you have heard me say in the past that I look at an IPO as a much longer race than a one-day sprint on that first day of trading. I also look at the quiet period ending, the first earning reports, and then the lead up to and then the expiration of the locked up shares. A quarterly earnings report with projections lower than the super high expectation the company has out there, or the possible sell-off from the insiders of all the locked up shares that previously couldn't be traded, looking to capture some profits, these are the times when the stock price could drop to a more reasonable level. Although there's never a guarantee that it actually will. But because it often does play out that way, think of Beyond Meat last year, that's one of the reasons I covered the upcoming lockup expiration dates on each episode of IPO This Week. Okay, let's call it here. This week has exhausted me. I'm 99.7% this has to be the longest week in video time recorded I've had on the channel. As always, I'll be back next week as we cover all the companies going public, including the company that many people seem to either love or hate, Palantir. I hope you join me. And also, just a friendly reminder to please like the video if you enjoyed it. YouTube really likes when you do that. And if you haven't yet subscribed to the channel, but are enjoying or finding value in learning more about all the companies going public, I hope you consider joining the community. We're growing fast and we'd love to have you on board. And with that, thank you for watching, and until next time, have a great day.